live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, traders. Welcome back to another live stream here. We are back after a very busy week, joined by Mr. James, the reporter. James, what's going on, man?
Hello, everybody. Nick, how you doing today?
Good. I am kind of glad it's Friday, James. We had a really busy week. Of course,
we have had a busy week.
Busy week of live what are we here today, James? We've got some final call news coming out in about 30 minutes, and
just a little bit of news here to wrap up the end of the week. We have the preliminary consumer sentiment report out of the University of Michigan here. Not quite as big as some of the other news that we've had, but we've had a really packed news week between Tuesday having the CPI report, Wednesday going straight into PPI and then FOMC, and then yesterday, of course, with retail sales, unemployment claims, and that's just the U.S. news. There was so much other news affecting other currencies that also happened this week. But yeah, like I just said, here in about 30-ish minutes, we're going to have the preliminary consumer sentiment report.
Yep, should be a busy day to end out the week, I guess. Like you said, not to mention yesterday we had a big one out of Europe. For those of you guys who are, watching out of Europe, if you're trading the euro, if you're trading, any of the euro or pound crosses, the yen pairs as well, making serious moves. Yesterday we got some monetary policy out of the yen, staying pretty much, of course, unchanged in their rates. Which was to be expected. We also had core retail sales and retail sales unemployment claims came out higher than expected yesterday for the U.S. And relatively next week, James, a quiet week, wouldn't you say?
Yeah, not certainly not as busy as this week. This is one of the busier weeks that we've had in a little while, but we do have things like UK CPI happening. We'll have the Fed chair, Jerome Powell, is going to be speaking 2 days in a row, so that'll be interesting to see what he has to say there. We have UK interest rates happening on Thursday and PMI on Friday. So a couple things to look out for here and there, but a relatively slower week, especially Monday, Tuesday. We're not really going to have anything going on. So a slower week, but certainly some things to watch out for next week as well.
Yep. And James, give us a high level, just a rundown of the heat map. What's moving this morning?
Yeah, so we're taking a look here at the market heat map. This is going to show us what's trending both to the upside and the downside here in the EDGEFINDER. And to start off with, we can see up here in the top left corner, that's Bitcoin right there, up 2.21% on the day. So good day for Bitcoin so far here at the markets open. And then we are followed by GBP JPY, Euro JPY, CAD JPY, USD JPY, CHF JPY. So yen crosses making moves to the upside here today. It looks like yen weakness. And down here towards the bottom, we can see NZD CAD, NZD USD, Aussie USD, Euro GBP, Aussie CAD, NZD CHF, USD CAD. These are our biggest movers to the downside, although none of them are down too drastically to start the day. Like we can see right here, USD CAD only down negative 0.03%, whereas NZD CAD is our biggest mover to the downside, still only down minus 0.22%. So nothing too crazy in either direction to start off the day.
Yep, fair enough. And thank you, James, as always, for the report of what's coming, what's today, what's next week, and a little look at the heat map. So, James, thank you for tuning in. James, ladies and gentlemen, he is one of the producers behind the scenes making these shows possible. So thank you, James, and we'll see you back on the next one.
Yeah, of course. Thank you for having me.
Yep. So, yeah, a couple things to look at here right off the bat, guys. It was a really, really busy week, and when I say busy, I mean you had markets moving like crazy. We got some stuff that the markets really liked. I guess the risk on markets, if I'm being specific. So, for example, if I'm looking at the S&P 500, I had a really nice trade on this one this week. Of course, it's left me on this particular trade, though I am still in some options that I've sold that are doing very, very well. We've made some money on those inside of the group. I've got, I essentially traded the S&P from here to about here. I trailed out. So of course I missed this last leg higher, but I would say I caught, a good 60% of the move here. And now I'm just looking for pullbacks. I mean, I think that for me going into next week, the indices now just look like great buying opportunities on pullbacks. I've been long, and the account that I'm trading, I've talked about this in the past, but 2022 was a really tough year for me because I'm generally long oriented when it comes to the indices. And, last year was a tough year for risk on. So if you look at the weekly chart, you can see here was 2022 on my trading account that I show often, the Webull account that I use. I actually had a negative year last year, which was my first negative year that I've ever actually had after becoming consistently profitable on this account. Now, granted, during 2022, we were very long the dollar, and so that cushioned some of the loss that I had in my indices and gold kind of trading account with some of the currency trading that I did. I've been very, very much less interested in the currency trading side and way more focused on gold and indices this year, which has proven to make it so far my best P&L wise year ever so far to date. We'll see if that can continue. But again, I am looking for pullbacks on indices, trading the S&P 500 long. If I can get a retest into this area, we've now seen a clear breakout. I'd be interested to try and pull it back and get another entry there. So let's take a look. We've got a lot of things to look at here today. The dollar has been really, really weak. And this to me, the thing is Wednesday's Fed statement and meeting just pointed to some very interesting stuff for the dollar. And I'll give you the quick fundamentals and then we'll go technical side with it. Fundamentals, very briefly, are essentially, the Fed has kind of in action been pretty pause oriented and softer than expected. Whereas in commentary, they kind of were like, hey, we're going to, we expect, to go up to 5.6%. And so in terms of an interest rate, funds rate. So there has been some talk of the Fed, raising rates and that sort of thing, but the market just does not seem to be buying it. And, this skip or this, pause that we recently saw, what we kind of think, Frank and I, we were having this discussion. We talked extensively about how, if 5.6% is kind of the worst case, the market is now saying, hey, there's a light at the end of the tunnel for this rate hike cycle, where before there was no end in sight. We now start to see this end in sight for the Fed funds rate. At least that's what we're getting telegraphed from the Fed. And so that's kind of, very risk on if you think about it. Now, of course, it's not necessarily we're all out of the clear or anything like that. Still very high levels of inflation, but employment numbers look good in the US overall. For now, right? GDP growth has been fine. You had companies performing pretty well. And so for me, indices look like buys. And when we talk dollar, I think the dollar right now, from a fundamental perspective, and I want to talk about this because when this thing started trending up again recently during the debt ceiling stuff, many people asked me, Nick, why aren't you buying the dollar? Why aren't you a part of this? And I have to admit that I was bearish on the dollar during this time, and it went a lot further than I thought. I wasn't shorting it. I didn't have any trades on during the dollar run up. I like to wait for technicals to align with my fundamental bias. But what I found very interesting is during this time, fundamentals kept me from buying the dollar purely because I thought, I think the inflation story continues to come down. I think the Fed stays on a softening path. So that kept me out of going long the dollar. The dollar does really well when interest rates are expected to rise and the Fed is just super strict on inflation, that sort of thing, when they're just expected to raise rates and not step in to help the markets if things go wrong. Like those things cause strengthening dollar, those risk off concerns, etc. recession fears, that sort of thing. Well, we're seeing this thing now align with my fundamental bias, which has been bearish on dollar. I was very bullish on dollar 2022, 2023. I've been pretty exclusively bearish on the dollar. And I've been right for periods and I've been wrong for periods as well. But I want to talk about dollar price action here now. Let's take a look at technicals for a moment. And by the way, if you guys are enjoying the stream, there's over 200 people watching right now. It is a Friday, so streams are usually a little quieter. If you guys wouldn't mind, hit that thumbs up for me. Smash the thumbs up button as we continue here. So price action here for me looks very bearish. If you're looking at the dollar here, from a technical perspective, we had a support level. We had a couple support levels really break for the bulls here, and actually even begin acting as resistance. So I've got this level here, right? This 103.4 level, which held us beautifully for a support level for a while. But then once it cracked, it really just followed through, especially with the Fed being kind of giving extra push to the downside. My opinion on the dollar is any rally, I am generally going to look with skepticism in terms of a bearish bias, right? I'm looking at this thing and I'm saying, okay, well, if this pulls back, that 50% retracement looks like a pretty strong area for sellers who may want to join the move, right? Sellers, a lot of sellers who missed this move may be saying, well, hey, that looks pretty good. And so you have this momentum push to the downside. I think fundamentals align to the downside for the dollar for the time being. Until something changes, I'm bearish on dollar. And so when we look at something like Euro USD or we look at Pound USD, generally speaking, I am looking at this with a bullish outlook. So if price drops on euro dollar, I'm looking to get long. And I want to show you guys something very interesting. By the way, there's a lot of you guys saying hello and good morning. Good to see everybody. Hey, Jason. Hey, Denise, Gareth, John, Franco. Good to see everybody in the chat. Thank you for being here. And hope everyone's having a wonderful Friday. So I wanted to show you guys something, because here is another thing when studying the dollar this morning together, I wanted to bring to you guys' attention. The dollar has been falling dramatically. What we tend to see, and we've talked about this point many times, retail positioning generally is pretty contrarian in nature. So what I mean by that is that the dollar CAD falls, the dollar Swiss falls, and guess what retail traders start doing? They start picking up long positions and buying the whole way down. Now you might be saying, well, that sounds like not that dumb of a strategy. Buy when it's low, sell it when it's high. But the problem is it can go down for much longer than traders are expecting. So let's go take a look at another example. We'll look at the Pound USD. So when we look at Pound, guys, Pound, retail traders are heavily short on this pair. And when I say heavily short, sometimes people think like, oh, so they're selling right now. Well, maybe, but they've also been selling here and selling here and selling here. What retail traders typically do on repeat is they sell uptrends and they buy downtrends, and not at the right time, right? So they're not selling once it's starting to fold back the other way and they're capturing beautiful. No, usually they're selling a rally and getting smoked. And then when it flips the other way, when it starts going down, they start buying it and holding the bag, right? So right now we kind of see this very unique polarizing dynamic where most dollar crosses, retail traders are very much buying the dollar as it gets destroyed and selling other currencies. So again, selling the Aussie against the dollar and selling the pound against the dollar and selling the euro against the dollar. Meanwhile, these things are having great, strong runs. This is a theme that we see so consistently on the EDGEFINDER, and it's why we have this retail sentiment tab. Let me know, guys, do you like using retail sentiment? If you use retail sentiment in the chat, let me know. Type yes really quick for us there. We'll make sure to check the chat here in just a moment, see how many people are saying yes. I know retail sentiment is something I've used for a number of years. It's pretty interesting, though, how obvious it has become to me over time. And many of you guys may feel the same way. Usually, when you have a chart moving like this, what starts happening is we can pretty much assume 90% of the time, retail traders are just shorting this. Like, we know this from experience. We do this on the channel. We've been doing these live streams for years, and it's a repeating concept. Retail traders sell rallies and they buy dips. And it's a very interesting indicator. Now, buying dips, there's nothing wrong with buying dips, but you have to be very cautious with it. Make sure that you're not, buying a dip that's going to dip much, much further. So yeah. Do you think using COT data or retail sentiment is more useful for trading? Julian, so I'll give you a take on that. But I'm gonna bring in some help for that. We're gonna bring in Frank here in a moment because I think he might be able to help us with that too. For those of you guys who are newer to the channel, you may not know Frank, but let's bring in Frank. Say hello to Frank. Hey, Frank.
Hey, how's it going?
Good to have you back on the show. So Frank, we had a good question in the audience from Julian. Julian says, do you think using COT data or retail sentiment is more useful for trading? And I'll let you answer first, and then I'll add my comment. What do you think about that? Do you COT data or retail sentiment more useful?
Well, personally, I do use COT, but they kind of go hand in hand in a way, um, in regards to how they just are exact opposites for the most part. So if you read one strong sentiment on the retail side, it probably means the opposite sentiment from smart money. So either way, I think retail is usually wrong, and they're probably from what I've noticed is that they're like usually in these moves too early. Like they're always trying to trade reversals. If things move too high too quickly, they want to get in on like a pullback and see things come down, and vice versa. But that's not always the case because smart money has large amounts of cash flows that take like longer periods of time to move and set price. So higher highs doesn't mean you're gonna top out and come back. It oftentimes means like there's an uptrend or a downtrend that's looking to continue, and so COT is very helpful in pinpointing where the direction of a certain asset's going to go.
Yeah, no, that's a good way of putting it. And I think, to your point about sometimes they contradict one another, I've got an interesting example for that. So right now, what we can see here is I've got the COT Smart Money Tracker page opened up, and I've isolated just gold for this example. So Julian, to answer your question, I think Frank did a good job. He kind of cross-examined the two. And this is what we often do. This is why in the EDGEFINDER, you can find both of these things is you have smart money data and you have retail or dumb money data as well. So if we take a look at gold right now, it's a very interesting dynamic. You have institutional money, which has been for a while now, very much on the long side. It seems like they've been building a big position on the gold market on the long side. And then you take a look at the exact same time right now, we pull up this data on retail traders, and we see retail traders are 70% short. Now, this is client positioning that we pull from brokerage positioning. So we can see that retail traders' current positions right now, as of the latest data, are 70% on the short side. So contradicting one another, big money is long gold, dumb money, retail money is short gold. Now, I want to clarify that if you're a retail trader right now and you are short gold, it does not necessarily mean that your trade cannot possibly go into profit, right? Sometimes people get this mixed up. I'm not insulting anybody. If you're a retail trader with a short on right now, maybe you have a perfectly good reason to do so in your strategy. These indicators that we're pulling up, Smart Money Tracker, retail sentiment, they're not magic, perfect systems. There are plenty of times where gold right now could continue to go lower, despite big money being long, retail traders being short. Sometimes retail traders are on the right side of the trade. It's just that we usually see that pattern, favor big money. And so that's why we track it. And within the watch list signals tab, this is why when you go to this tab and you take a look at gold, what you can see here is that when we calculate the scoring here for our system, COT bias shows positive and retail sentiment also shows positive, meaning both of these are bullish indicators right now because COT, big money, is long gold and retail traders are bearish, which for us is actually a bullish signal. I know that can be a little bit confusing to people who are newer to the EDGEFINDER, but again, if retail traders are very short, we view it as a bullish signal, which is why in our scoring system, we give it a positive score. So if I'm looking at this, if I'm talking COT retail sentiment, I'm kind of looking at it as a both of them matter to a degree to see which one is kind of weighing up and how are each one positioned, if that makes sense. So Frank, thank you for tuning in here and answering that question. I think it's a pretty good one. You guys, Frank is one of the team members here behind the EDGEFINDER. We're working on this pretty much all the time to improve it, and we've got new stuff in the cookbook, I guess. So Frank, it was a short one today. I've got Kenzo getting ready to join us here in just a moment. So thank you for coming on the show and answering that question.
That's good. Thank you.
All right. Yep, guys. So Frank works with us behind the scenes on getting the EDGEFINDER built. He's in the office here with us and helping to make that possible. So by the way, guys, if you guys would like access to the EDGEFINDER, here's what you can do right now. You can actually get it by messaging us if you guys would like to trial it, or if you guys would like to go ahead and get access to it. If this is something that you think would be helpful in your trading, send us a direct message right here. Click this link. It's going to open up a chat icon where you can actually have a conversation with one of our support reps. So it takes you here. Click chat now, click EDGEFINDER. And also, by the way, remember, we are ending our VIP sale. We're doing 50% off. And if you message us right now, you get 55% off. So click this link. There's a lot of stuff available to you. We also have our 8-cap and EDGEFINDER promo, which you'll hear about in just a second, and so much more. So message us in if you have not done this before. Do it right now. It is a great, there's free resources. We also have some amazing discount offers for people who are watching the stream with us right now. If you want all of our trade alerts, 55% off, message us right now inside of this link. You'll get a chat icon that pops up. So real quick, we're going to take a quick break, and then we're going to be joined by Kenzo, who we will probably talk about some gold, talk about some indices with him going forward. So quick break from our sponsors. Right after this, we'll be back with Kenzo.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back, joined by Kenzo. Hey, Kenzo, how are you?
Great, thanks, and you, man.
I'm good. I'm good. Good to have you back on the show. And I'm glad that we were able to get you back on this week. Of course, last week we talked about how busy this week was going to be. And it certainly was busy. What's your take on everything? Obviously, we had the Fed stuff. We had the ECB. We had retail sales numbers. I mean, it was just one heck of a week. What was your take on everything?
Yeah, I was also trying to process everything at once, but it's not really easy. But at least they confirmed something like they're not going to stop increasing the rates. At least they post the rates now, but they still have a room for the rates to go up. That's why during the news, actually, the market was a bit confused. But after that, it seems like it's a good thing because actually for now, they did post the rates and things started to go against the dollar like after that. And even now, we start to see that the dollar is getting weaker and weaker against other pairs, which is something really good. But what I did not like about CPI is core CPI was still very, like, it was not changing. The other ones, at least they did slow down, but it was still around 4%, I guess. So that is something that actually made them to say the inflation is still persisting and there is a room actually to increase the rates. And twice, that's the thing, twice this year. And if we check, we just left with maybe 5 months or something like that. So it means it's very, very close. So, but the market is, I think the market is already pricing into that. So I think we're going to see some sort of bullish momentum, but because we already know what might happen, you see.
So when you say bullish momentum, do you mean bullish momentum for indices, or do you mean for the dollar?
Oh no, sorry. For the indices, I will be talking about maybe let's say US 30, Nasdaq, S&P 500, also gold. I'm just waiting for gold maybe to break the resistance. I think we will see it pushing to the upside. It's been struggling a little bit, but I think we will see sort of some bullish momentum. You see.
Yeah, fair enough. Fair enough. Yeah, no, and I think it's an interesting reaction to everything, Kenzo, because I was trying to make sense of it all in the sense, the Fed, as you mentioned, in commentary was relatively hawkish. You had the Fed come out and say, more rate hikes are expected. We pretty much universally agree that no more cuts or no cuts are coming this year. They don't see that on the horizon. And so there was some commentary that was relatively hawkish from the Fed. Despite that, though, the markets absolutely took off. We saw, the S&P 500 blip around on Fed Day, but have since rallied from there. I'll give you my take, Kenzo, real quick on the S&P. I am bullish. Companies doing quite well. Forward projections look great. The economy is still strong. And now we kind of have sort of a cap, at least from the Fed, for how far they think rates are going to go. Now, of course, nobody knows the future, and they might change things as we sail upon this kind of sea together. But I think that, generally speaking, the market might be saying, hey, we now know the downside risks, and there seems to be a lot more upside potential. So it's an interesting dynamic. However, my take on it is I've got to see pullbacks, and I might miss some of the moves here. Now, of course, I've been pretty long biased on indices. I think you and I have both been pretty long biased on indices. But the question will be, is the Fed kind of just, someone said in the chat, Jerome is bluffing. Is that possible that, maybe he's just, staying on the side of caution? Are you a buyer up in these prices? Are you looking for pullbacks? Are you even bearish? What do you think? S&P specifically.
Yeah. Actually, I think you're right when you say maybe Powell is bluffing, because you can't pause now and say, why don't they just increase now, you see? So I think obviously he doesn't just want to go out and say, guys, traders, now it's time to buy. You can't say that. So you have to have a mixed message. And we're going to actually analyze that and actually understand, okay, if things are like this, obviously we're going to go this way, because we can easily see that even though inflation is not seriously going that lower very quick, but it's exactly cooling down. So which means actually the rates might not actually go up, because he said they are controlled by the data. And on our side, we can easily see the data that, okay, the data is going down, which means if we already get the same data next month, it means they're not going to increase the rates. So actually, it can't say, guys, things, as we can easily see that the inflation is going down, which means if it keeps going down, they're not going to increase the rates. But you can't just say, yes, do this, because the market will react to that, and that is not actually good, because it's someone who is in the Fed, in the Fed. So you can't just say, yes, we're going to do this and that. Then the market will easily buy or crash if maybe it's bad, you see. So here I have to be 50-50. That's why at the end of the day, the market is not going to spike up or down. We're just going to dissect everything. That's why after an hour or 2 hours, the market starts to take a certain direction, which means we start to understand that, okay, it means we're going to go bullish. And we can see also on S&P 500, the market did the same. The market is starting to push the upside. Today, I saw USD also trying to break that resistance. You can see we have If I go on a daily time frame, you will see that we actually have a resistance which has been like seriously strong, and today the market actually pushed above that. So you can easily see that the market doesn't really care much about whatever he said. It's like we know what you were trying to say. Obviously, you can just say, guys, go buy, but we know that we no longer have that problem of inflation. You see, inflation is getting
Yeah.
lower, so now we just focus on other things, and those things is to buy more. You see.
Yeah, no, good points. Because I think that's one thing. Sometimes people are you have to be careful when you listen to Jerome Powell. I say this often. If you are in his shoes, it's like you're saying you can't just go out and say everything looks good, time to buy. Like you'll never say that because in that role, your job is to be defensive and cautious and defend the consumer kind of thing. That's at least how it's supposed to be. So very much important. We just had breaking news, by the way. Sorry, I missed it today. We do have, in fact, let me make sure we get this number updated. So we just had preliminary UOM consumer sentiment came out higher than expected, 63.9 here, which of course, if you guys are unfamiliar with what this is, it is financial confidence, leading indicator of consumer spending, which accounts for majority of overall economic activity. So we had a green number here, higher than expected. So let's see, how is that impacting in terms of consumer spending? It's an interesting one. You have the dollar here. Pull up the hourly chart for a moment, trending down just a bit, not too much volatility there. However, seems like we just had a bit of a bump on equities, just slightly. NAS 100, not really too much to mention there. But of course, let's see, that 15-minute chart had just a shoot down just towards the very end. Let me actually go 1 minute, see where that spike occurred. Okay, no, it's just kind of a trailing from the open down just a little bit here for the NASDAQ. So I would say not too eventful of a news event here this morning. UOM consumer sentiment came out slightly higher, 63.9. So yeah, it's just another piece of information. I feel like the market, though, and feel free to differ from me if you think so, Kenzo, but I feel like the market is just still very, very hyper focused on all the stuff that we got this week and still digesting what we got from the Fed.
Yeah, I think gold, you can check gold there. It's the one which is making some nice moves. I think it was trying to break that resistance there. After those news, I'm hoping that maybe we might see a breakout. Maybe that breakout will happen. But yeah, it's something that maybe we can just wait a little bit and see if maybe it happens or not. But it seems to be very strong. I'm expecting just to wait and see if maybe it happens, because I think gold is going to give us some very nice moves. I think it's a bit delayed. Whatever that is happening here has been delayed, but we know that few weeks or few days we will find gold somewhere very high, obviously.
Yep. And I think you bring your attention to gold. I'm kind of there with you too. I think for me, indices, S&P and gold, probably my two favorite things that I like to trade. And gold's been, of the two, the more boring one recently for me, just very stuck in a range. S&P has been great, but now it's at a point where, I'm a buyer, but I've got to be a buyer on a pullback. However, like you mentioned, gold is at a very interesting spot. It's at a very close to execution spot for me, where if we're able to get some sort of break of this 1965 area, we clear the 1970 area, I'm going to be looking for pullbacks, because I do think that things lend to bullishness on gold. I just need to see price action kind of agree. And we've talked about this here just before you stepped on the show. We were talking about gold, and a couple key contributing factors that I think are worth noting is that, you do still have high levels of inflation. This, of course, generally is an environment in which gold does pretty well. We also have COT data, which shows that big money is very positioned on the long side of this trade. Despite recently it kind of consolidating, big money seems to have been building a big position on the long side. Retail is very short. So you have all these kind of contributing factors that lend bullish. You also have June and July both expected seasonally to be upward months for the gold market. And so I think the risk to reward for me on gold is especially good if we can get the breakouts, retests kind of concepts that you're talking about there, Kenzo. So walk us through, for you, gold trade. Do you have one in mind, and how would you enter a gold trade if you could find one?
Since if I go, let me go maybe on a daily time frame. On a daily time frame, we can easily see that the market is way too closer to our support area. So if I go closer again on 4 hours time frame, you will see that these areas, they are playing around this zone. Actually, someone who actually trades like swing trading, they will call this as the same area as a support area. So my job here is to wait for a breakout. As long as the market is going to break out of this resistance, that is going to be my first trades going longer. So from here, I will be waiting for the market to see if maybe it's going to break this level. We also have another level around this area. I think it's 960. I don't know if it's 9 something. So that is also another zone that I will be checking. But if we get out of this, that is a clue that, okay, guys, I'm ready to push the upside. This area might actually reverse a little bit, but I will be expecting the market to continue pushing to the upside, especially when we had all the news along the way, but all those news, they were unable to break our support level. So which means this area is very strong. So we're just waiting for the market to continue. Unfortunately, the market won't just make things easier for us, and it will just wait. Maybe later on it might break when we forgot. So it's better, let me just place a notification here. So when it breaks, I will get that, you see.
Yep. No, I like that. Good
So
concept there.
That's what I'm
Yeah, especially when you're talking about that longer term chart. I liked that, you pulled up the daily chart. Frank had a similar chart himself, longer term upward trend line that you've got there on the daily. And to your point, consolidation here may just be for longer term stuff, kind of just a support zone that's just being tested. You mentioned, when you pull it out to the weekly, to pull it out to the daily, it's just kind of bouncing around off of a support level and watching it for a reaction. So I'm kind of with you on that. I do like bullish setups on gold. If I can get a break above 1967, that's probably where I'll look to enter, whether it's today or next week. If it's able to get a breakout, we'll have to watch and see. But definitely an interesting week. And Kenzo, I just want to say thank you, as always, for coming on the show, giving some clarity both on the fundamentals and technical side. If you guys do not already follow Kenzo, make sure to do so right now. We've got his link in the chat. If you guys don't follow his YouTube channel, it's Extra Hot Forex. We've linked it there for you. Click that link. Go find him on YouTube and socials. And Kenzo, thank you for coming on to the show, as always.
Thank you very much, man.
All right. And yep, as always, good to have Kenzo. He's what I appreciate about Kenzo is he's got a great mix of technicals and fundamentals, which we try and do on the show. We try and offer a little bit to everything. That is kind of my trading style. We have technical traders that come on. We have more fundamental traders like Kenzo and myself. And so you get a nice mix, I hope, by just watching this show. If you guys enjoy our show, do me a quick favor, hit that thumbs up button, hit the subscribe button. And remember, do not forget, we are ending soon our sale on our Discord memberships. You can get trade alerts from myself and Frank, our two traders here at A1 Trading. And also we do coaching webinars with Ivan throughout the week. So if you're looking to improve as a trader, if you're looking to meet other traders, and if you're looking to look over the shoulder of traders who have been doing it for a number of years, Frank, myself, we share our swing trades on the FX side, the commodities side, the indices trades, everything that I'm trading. You can get phone notifications to your phone or to your desktop. You can also get the same for Frank. I think he's trading something this morning. He was long Swiss yen. I think he's trailing a stop on that. I do options trades, positions trades, and all of it right now. While we are on the live here, you can get 55% off only if you message us on our website. Click this link. It's going to take you to a direct message center where you'll be talking to a real person, not a robot, not a form or anything like that. We've got real people on deck. If you are a regular viewer of this stream and you would like the biggest discount off of our memberships ever, come hang out with me and the rest of the crew inside of our Discord channel. We have chat rooms, coaching webinars, educational material. We've got it all. We've got a great community surrounding it with lots of very great team members that make it possible. So if you enjoy my content and you want that 55% off sale, message us now using that link. Thank you guys for tuning in to what a great week it was in terms of live streams. And we will be back, as always, for more next week. Thanks for watching. What's up?
Dude, what happened to you?
Haven't you heard? It's the summer half off discount sale.
Oh, that's right, I forgot.
Right now only, get half off any of our VIP Discord memberships. These memberships include access to our signals, where you can get entries and exits from Frank and I, and full breakdown and analysis with each trade. You can learn our strategies in detail. You can learn how to get funded with our training material to help traders looking for funding. And you can also join the chat room community. We have several membership opportunities, so click the link and check them out for yourself. And remember, you get half off if you either message us or use the discount code you see on the screen now.